New York woke up confident in 1929, believing it had finally mastered money, risk, ambition, progress, and even the future itself. Every street carried certainty, as if prosperity had become permanent and failure no longer applied to anyone living here. The city had survived wars, recessions, and financial panics before, convincing people this moment was different from all others. Skyscrapers rose higher each year, physical proof that ambition could stretch endlessly upward without serious consequences. New buildings reshaped the skyline, reinforcing the belief that growth was natural, endless, and unstoppable. Wall Street pulsed with constant energy, attracting crowds who believed opportunity lived permanently inside rising numbers. Stock prices climbed steadily day after day, making downturns feel temporary, distant, and almost imaginary. Newspapers promised endless growth, confidently declaring a new economic era untouched by old financial rules. Success stories spread faster than caution, making sudden wealth feel accessible to anyone willing to participate. New York believed it had cracked the code of prosperity, leaving uncertainty behind forever. Money felt unusually easy to obtain in 1929, flowing through New York faster than caution or restraint. Banks eagerly offered loans, assuring customers that rising markets made borrowing not only safe, but smart. Credit became a shortcut to wealth, blurring the line between real money and imagined profits. Buying stocks on margin spread rapidly, allowing people to control far more than they actually owned. This leverage magnified gains, hiding the danger that losses would grow just as fast. Office workers, shopkeepers, and clerks all joined in, convinced markets rewarded participation over expertise. Taxi drivers shared tips between fares, while waiters compared stock picks after work. Speculation became social currency, a sign of intelligence, confidence, and modern thinking. Few asked where the money truly came from, as long as numbers kept rising. Easy money created a dangerous illusion, making risk feel distant and almost irrelevant. By mid-1929, stock prices no longer rose smoothly, creating small, irregular dips that attentive traders quietly noticed. These movements felt unusual, but most investors dismissed them as temporary noise within an unstoppable market. A few experienced voices suggested caution, though their warnings struggled to compete with widespread optimism. Financial newspapers began printing cautious language, buried beneath louder headlines celebrating continued growth. Trading volume increased noticeably, signaling uncertainty even as prices remained relatively high. Some investors quietly reduced positions, hoping to secure profits without alarming others. Most people ignored these signals, trusting markets would correct themselves just as they always had before. Confidence remained dominant, but it no longer felt effortless or completely unshakable. New York continued its routines, unaware that balance was slowly slipping beneath familiar rhythms. The cracks were still small, but history often turns on moments like these. By early autumn 1929, price swings grew sharper, creating sudden moments of tension across trading floors. Daily market openings no longer felt routine, as traders arrived already watching each movement carefully. Small sell-offs appeared without warning, briefly rattling confidence before prices stabilized again. Each recovery reassured investors, yet the calm afterward felt thinner than before. Brokerage offices grew louder, phones ringing more frequently as clients demanded constant updates. Experienced traders began limiting exposure, quietly preparing for outcomes they hoped would never arrive. Optimists dismissed caution as unnecessary fear, insisting strong fundamentals still supported rising prices. This divide between confidence and concern spread silently, changing conversations throughout the city. New York continued celebrating progress, even as uncertainty tightened its grip beneath the surface. The market felt stretched, balanced carefully between belief and something far more dangerous. On a tense morning in October 1929, selling surged suddenly, overwhelming by orders and shocking even seasoned traders. Prices fell rapidly across multiple stocks, moving faster than traders could react or understand. Phones rang nonstop as brokers struggled to execute orders amid growing confusion and panic. Crowds gathered outside exchanges, sensing something historic was unfolding behind closed doors. Attempts to stabilize prices briefly slowed the fall, but confidence continued draining away. Margin calls triggered, forced selling, amplifying losses far beyond initial declines. Information lagged behind reality, leaving investors blind to the scale of losses spreading. Silence replaced shouting on the trading floor as disbelief settled in. Outside, anxiety turned to fear as rumors spread faster than official statements. By day's end, New York realized something irreversible had begun. Panic spread rapidly as investors rushed banks, demanding cash while fearing their savings might disappear overnight without warning across. New York in 1929. Lines formed outside banks as clerks struggled to reassure crowds growing louder, angrier, and increasingly desperate throughout Manhattan during the chaotic days of 1929. Newspapers changed tone overnight, replacing optimism with urgent language that hinted at systemic collapse for readers across the city in 1929. Radio broadcasts interrupted schedules, reporting plunges and closures as listeners gathered silently around receivers inside apartments and offices. Throughout New York, 1929, businesses halted hiring immediately, unsure whether customers would return or credit would survive the sudden shock sweeping markets across New York, 1929. Factory managers reduced shifts, watching orders vanish while costs remained stubbornly high during the escalating panic of late October. Families began saving pennies, sensing hard times ahead despite recent prosperity promises. Made by leaders in newspapers across New York, 1929, construction sites slowed, leaving steel frames unfinished as funding evaporated suddenly throughout Manhattan and surrounding boroughs. During 1929 economic crisis, Wall Street felt quieter, the noise replaced by stunned conversations and unanswered questions about losses, responsibility, and what came next in 1929. New York realized panic was contagious, spreading faster than any effort to contain it across neighborhoods, banks, businesses, and homes In the weeks after the crash, New York moved slower. As shock replaced momentum and confidence vanished from everyday routines across the city unemployment rose quickly, forming long lines as former clerks, laborers, and professionals searched desperately for work throughout New York during 1929. Banks closed their doors unexpectedly, leaving customers locked outside, staring at signs that offered no answers or reassurance. In late 1929, families gathered around kitchen tables, quietly recalculating budgets while fear replaced optimism once promised by booming markets in New York. 1929. Luxury stores emptied as spending froze, revealing how quickly wealth disappeared when confidence collapsed across Manhattan neighborhoods. Office buildings grew quieter, with entire floors darkened as companies cut costs and staff following the crash of Construction projects halted mid-rise, leaving steel skeletons frozen above streets as symbols of interrupted ambition in New York. Newspapers now spoke of hardship, replacing dreams of prosperity with grim forecasts that unsettled readers throughout New York. Neighbors relied on each other more, sharing food, information, and support as uncertainty reshaped daily life across the city after 1929. New York endured the aftermath together, realizing recovery would take time and faith would be harder to rebuild in buildings. Wall Street reopened quieter and more cautious, its former confidence replaced by careful silence and watchful restraint across New York. In late 19. Investors returned slowly, studying numbers with skepticism rather than excitement, aware that certainty had vanished from markets forever after 19. Government officials began drafting new rules, realizing unchecked speculation had reshaped the nation's future. Through painful lessons learned in 1929, banks tightened lending standards, replacing easy money with caution as trust rebuilt gradually across the financial system. After 1929, the skyline still stood tall, but its meaning had changed, reminding New Yorkers' ambition carried consequences beyond imagination. In 1929, skyscrapers, once symbolizing endless growth, now stood as reminders of risk, loss, and lessons learned the hard way in New York after The city adapted slowly, rebuilding trust, institutions, and confidence with patience rather than blind optimism after the crash of 19. New York's rhythm changed permanently, more careful, more aware, shaped by memory rather than illusion after 1929. The crash became a warning whispered through generations, reminding prosperity can vanish faster than it appears. New York survived the fall of 1929, but the city never again believed the future was guaranteed.